Hey everyone, Dalton Grados with Grados Capital here. Now, I know I have not been as active on my YouTube channel recently. However, I have been very active over on Instagram. So while you're here, go ahead and follow me over on Instagram at Grados Capital. And while you're doing that, don't forget to hit the like button and subscribe below if you haven't already for the YouTube algorithm. So if you follow my Instagram page, you would know that I posted a few days ago that I had, for the month of August, 100% win rate in my trading. Now, of course, perfection can never be maintained and losses will always be inevitable. However, my strategies tend to have a high percentage win rate. And of course, win rate is not everything. You can actually be profitable with a 50% or even less percent win rate as long as your losses are kept small enough and your wins are big enough. So it's mostly about the size of your wins and losses that's going to determine your overall profitability. However, when you combine a high win rate percentage with good risk management, then you become a money printer. And today I'm going to be talking about 3 ways to become a more consistent trader. Number 1 is position sizing. I think this is probably the biggest issue that newer traders face, and the reason why they get so stressed and emotionally have ups and downs related to trades is because they're sizing too big for what they can handle. And so ironically, in order to get a higher win rate, you must first be okay with losing. And so you should always size your trades, not by how much you want to make, but by how much you are okay losing. And so whatever your stop loss is, if that amount is not a big hit to you, or that is a reasonable amount, then you should position size in accordance with your stop loss. So for example, in my trading plan, I have a negative 2x stop loss, so I'm risking 2 to make 1. The risk reward is upside down because I'm playing higher probability trades and credit spreads. I've talked about that in other videos. But the bottom line is, if I enter a credit spread and my max profit is $300, I have to first say to myself, okay, the 2x net loss would be $600. Am I okay with that? And so if I'm okay with that, then perfect. I put on that trade and it's a stress-free trade because I know where my stop loss is and I'm okay with that. If I see a position that looks good, looks like a good opportunity, and I'm going to make $500 off of it, I will actually back off of that position if I'm not okay with losing $1,000 with my account size. And of course, everyone's account sizes are different and their tolerance in dollar amounts is different based on their account sizes, but that is a general rule to go by. Because when your position sizing is in check, then you will not get stressed over the trade and you will not make emotional decisions that will lead to losses or cutting too soon or letting a trade run way past its stop loss because you can't stand to lose that amount of money, so you're just going to hold and believe it's going to come back. None of that will happen when you have proper position sizing because you will not be emotionally invested into the trade. The second way to increase your consistency, your win rate in your trading, is to have bread and butter underlying stocks and ETFs and indexes, whatever underlying you trade, have ones that you follow consistently, that you trade often. The best traders I know trade only a handful of things that they really understand well. I am an SPX trader. I trade exclusively the SPX, which is nice because I understand how it moves, I understand how different factors affect it. I've just gained so much experience in solely focusing on SPX that I have sort of a understanding of it that I would not have if I were to go look up whatever the hot stock of the day is. So again, whatever it may be, whether it's tech stocks or small cap stocks or natural gas or whatever, if you just focus on a few things that you can handle and you can begin to track those things and understand those underlyings well, you will be able to be more consistent in trading them because you have experience in trading them. I don't really know many consistent traders that when they wake up in the morning decide on a whole new stock that they've never heard of to trade. Generally, people will have the same set of underlyings that they go to, and so rather than waking up in the morning and saying, oh, okay, what's poppin' today, I'm waking up in the morning and saying, okay, I'm trading SPX, what's SPX gonna do today? And that is a much more consistent routine that you can get in your trading. Okay, the third and final tip is to keep it boring. This goes a little bit with keeping the same underlyings, but expanding on it. You know, once you have a strategy that works, just keep it. You don't have to try to change it up every time. Just keep doing the same thing, because your goal in the stock market is to make money. It doesn't matter how you do it. The goal is to be profitable. So I trade 10 delta credit spreads. Okay, I don't go to 20 or 30 delta if I'm feeling a little bit more ambitious. I just stick with this 10 delta every time. And that's a way, especially with selling options, sticking with the same delta is another way to let the probabilities play out, because those deltas should have about a 90% win rate. But if I stick with the 10 delta every time, those probabilities will play out. But even if you're not selling options, even if you're doing something else, just stick with the same thing. Keep it boring. I know someone in one of my Discord groups that makes 30 grand a month just doing the wheel strategy on QQQ, which is the ETF of the NASDAQ. And he does it weekly on every expiration. So every Monday, Wednesday, and Friday, he will sell puts on QQQ, and the following Monday, Wednesday, Friday, he'll collect his paychecks. And he's not worried about what the next biotech stock is doing or whatever. That works for him, and it's boring. He pretty much just keeps doing the same thing, but it works for him. So that's it, guys. When it comes to specifically increasing your win rate in your trading, number one, get your position sizing in check so you're not emotionally in the trade. Number two is to stick with the same underlines. Stick with things that you know and have grown to know and like over time. Number three is keep it boring. Stop searching for the next shiny thing, you know, or another strategy. Oh, Jade Lizard, even though you've never done a Jade Lizard before. Stop doing it. Just stick with it. If it's working for you, then just stick with it. And you know, I think it was, I don't want to misquote, it might have been Peter Lynch or some famous hedge fund guy said that the best trading is boring. That's okay. Again, your goal is to make money. So that's it, guys. Don't forget to like, comment, subscribe below to Greatos Capital, and follow Greatos Capital on Instagram. I'm usually posting stories every day, and I'm also very active in my posts, and you can connect with me on there as well. Thanks for watching.